Hi, welcome to the video, and it is December 27th, 2018, and it's 6:30 p.m. Eastern. And I appreciate you joining me tonight. So let's get the trade up so that you can see what I'm talking about. So we'll hit our screen share, and it's trying to find it. Yeah. This is funny. It's not actually showing, so just a moment and I'll pull it up for you. There we go. I found it. And it's New Zealand dollar and United States dollar, or NZDUSD. And this trade is a buy, and it's been a buy since June 25th of 2018. Being in December, at the end of December, this year's almost over, but I'm not concerned. Most people have issues trading in the months of November through December because of the holidays, and the trade market is extremely volatile in every area. So, having said that, this is a buy, and it's a 0.01. It's the lowest buy that you could possibly have. And as I'm looking at this, I might actually be changing up a few things. But I'm not concerned. This buy is the price entered at is 0.69586. My stop loss, going down into the 4-hour time chart, you can see where it's sitting, and it's at 0.63586, which is 6,000 pips or $60. Now, don't get me wrong. This is an awesome stop loss, but it's also my take profit, which is sitting at 0.75586. And as you can see, it's 6,000 pips or $60. Now, the reason it's 6,000 pips and only $60 on the stop loss as well as the take profit is because the last pip isn't considered. So to find out how to see how much you are going to have to lose or to gain is to take the 0.01 times it by the amount of pips, and it gives you the amount of the take profit and stop loss, how much you could actually see. Or reverse that. Take how much you are actually making and divide it by 0.01. It would give you your pips, I believe. That's what it is, if not timesing. Either way, it's going to work out, and you can easily do it. So, what is a pip? Well, a pip is a measurement, just like a penny is a measurement for $1, or an inch is a measurement to a foot or larger. You get the idea. Having the lot size being at 0.01 keeps the risk to profit margin even, 1-to-1 margin. And it makes it a win-win-win regardless. And if you take a look, when I started this account, I was at $280 in my balance. Over the last 6+ months, take a look at the balance. It's over $1,000. It's almost $1,500. But don't misunderstand. The full amount of what's in my balance wasn't all done by trades. It was actually done from other accounts that I put into the balance to raise my margin level. And if you take a look at that, my margin level is at 6,628.34%, even though it's a negative $26.29. And the reason I said I might be changing this up a little bit is because of where the balance is currently at. Normally, I like to stay at least twice on the amount of my stop loss that the balance is at. And from what I can see, $52 or $5,200 is right about where it needs to be. So for tonight, we're going to leave it where the stop loss and take profit are currently at. Now, that's a lot to say in one word, right? Or one breath. Let's look a little closer. Now, I've been asked why I stay in the daytime chart. And this is why. The market is still open, and it's been kind of crazy due to the holidays. But going down to the minute time chart, can you see anything here? Granted, it's a naked chart, so there's no marking up the charts, there's no trend lines, there's no indicators. All that's on here is your stop loss, your entry price, and your take profit. Looking in the minute time chart, can you tell me what needs to be done? I couldn't tell you, and I wouldn't advise it. It's very, very risky if you don't mark up your charts. Going into the 5-minute time chart, there's a little more, very little information here. And with a naked chart, once again, I would not advise trading in this without the knowledge, marking up your charts, seeing where your entry price points are, your stop loss, and your take profit. It's near impossible to figure out what those are with no indicators. The reason I don't have indicators is because I have grand mal seizures while I sleep, and they clear my memory. So in the morning, I haven't got a clue who I am, let alone how to trade. So it takes time, hours through the morning to mid-afternoon for me to understand what I was doing in the first place. Meaning, I would have to mark up my charts each and every day. So it's kind of overwhelming if you look at it that way. That's why I trade in the day time chart as well. Now going into the 15-minute time chart, there's movement. But if you haven't had the experience, as well as the education, as well as marking up your charts, as well as figuring out the 5 rules that each of us normally have with our trading to see where this will go, it's too risky still. You don't have a clear picture of this trade. Moving in the 30-minute time chart, once again, this only goes back to November last month of this year. There's not enough information here to get a clear, complete picture of this trade. So a 30-minute or less time chart is extremely risky, and I wouldn't advise it. But you also need to decide what type of trader you are. I'm a long-term trader. I can handle sitting back and waiting for a trade to do what I think it's going to do. That's why I trade as long as I do. Going into the hour time chart, you can see stuff here, and things are definitely changing. And it goes back to October, so 2 months ago. Still not a clear, complete, clean picture of the trend that this trade is going. Keep in mind, when we're trading, we trade right, but we always look left. And I'll explain that here in a moment. Going into the 4-hour time chart, there's a whole lot more information here. And it goes back to January of this year. So we've got about a year here. However, there's still not a complete picture of this trade. Now, many people that I know that are other type of traders trade in the 4-hour or less time charts without an issue. And as soon as you figure out the type of trader you are, go for it. Have fun. Enjoy it. Keep the emotion gone. Consistency as well as patience is what's required when it comes to trading in the market. And that brings us to the day time chart. Now, when I said we trade right, but we look left, this is what I mean. Sitting where the trade's currently at, and it dropped from 26.20 down to 25.87. Granted, it's 33 pips. Not that big of a deal, but it's not going to hurt me any either. So you put your cursor where the trade's currently at, and then you drag it left until you find the same exact pattern previously, which is right about here. It looks like it's right about here. And this will tell me what I can be looking for. Yeah, it's right about here. In the next couple of weeks, couple of months. And it is definitely getting ready to turn around and go into profit. And that's always a good thing. And I like seeing that. So as soon as it goes over my entry price, then I can actually move my stop loss above my entry price, making it a risk-free trade. And that is what we're all looking for, is it not? So I'm going to stop my screen share, and I will answer if there's any questions. But I have some information for you. And thank you for joining me. Now, I've been asked, where do I get my signals? And that's fairly easy. There's 5 different areas. There's Orrin Wright and Stevenson Lindor, who are educators in iMarkets Live TV. It's an education to give you the skills and knowledge that you need. The only way to have access to them is to become part of iMarkets Live. If you want to know what iMarkets Live is, go to whatisiml.com, and it will be willing to show you exactly what we're talking about. The third area is through Christopher Terry, who is the CEO of iMarkets Live and has over 25 years of trading experience through the market. And we're not just talking regular currency. We're talking cryptocurrency as well. And he is an expert at it. So I would be putting my trust and knowledge into him because of what experience he has. The fourth area is Tracy Walker, who happens to be my sponsor through iMarkets Live, and she teaches and holds webinars as well as summits that teaches the basics, intermediate to advanced on how to mark up your chart, find your entry price, find your stop loss, find your take profit, when to get in a trade and when to get out. And we are starting something new on January 2nd, and it's optimal entry. And if you want to know more about that, take a look on Facebook and ask away. There's questions that can be answered. And the last and final place is Swipe Trades, which is an app on your smartphone. So yes, you can trade off your smartphone. To get access to that, however, you need to be a part of iMarkets Live. So with access to all 5 of these areas, you need to join up and get started with iMarkets Live, and we will make sure you get the education as well as the knowledge on how to do trading in the Forex market as well as the cryptocurrency, and that's Bitcoin, among others. So yeah, we've got it. All you need to do is get going. Thank you for joining me on this Thursday evening, and I'll see you all tomorrow. Have a great day. Bye for now.